Okay, so the number I have is 15052. Is that correct?
No.
What is it?
Can you do me a favor and check your email, Mr.? You got the same confirmation number in your email, so if you want to check that, it's there.
I don't. I'd rather you tell me.
151
151
052.
052. So that number is 151 052, correct?
That's correct.
Okay. Alrighty.
Thank you for banking with BMO here.
I have some questions, Miss Yolanda. I was gonna ask her if she had a survey at the end I could take.
Are you expecting an IRS economic impact payment? We recommend you visit irs.gov to find out when and how the IRS will send you your payment. Just look for the Get My Payment button. Good afternoon. Thank you for banking with BMO here. It's Yolanda speaking. How may I help you?
Yes, Miss Yolanda. I would just like to make a payment on my car loan.
Sure, I can take a car loan payment for what is your name?
My name is the FX Savant. One more time, I have to do what?
What is your name?
The FX Savant. And I told you that. But what did you say before that? For me to pay that amount, I have to do what?
You don't have to do anything. I just asked you for your name, but you have to listen to a disclosure first.
Oh, listen to a disclosure. That's what it was. Okay.
Mr. There is information that must be disclosed to you. As part of this information, I will be conferencing in a recorded message that will state the required information. I will stay on the line with you while the recording is playing. If you have any questions on the information disclosed, we can discuss after the recording has finished. There is a 3-second delay before the disclosure begins. Are you ready to listen?
Yes, could you repeat that one more time?
Mr. There is information that must be disclosed to you. As part of this process, I will be conferencing in a recorded message that will state the required information. I will stay on the line with you while the recording is playing. If you have any questions on the information disclosed, we can discuss after the recording has finished.
Okay, after the recording has finished. All right, got it. I am ready now. Yes, I am. Thank you for that, by the way.
By submitting this payment, you indicate your agreement to the terms of the BMO Harris Express Loan Pay Service. I'm entering the data into the system to take your payment.
Okay, thank you. I do want to preface this by saying she was nasty first, so I had to get nasty back. I asked her what she said, tried to say all she did was ask me her name, ask me my name. She tried to say all she did was ask me my name, and she asked me something else, but I needed to listen to some disclosure, so I called her out on it, and she got mad. So I'm just gonna make your day a living hell. If you're gonna play like that, I can be petty too. You the one that gotta get off at 5. I got time. Don't play with somebody who got time. Word of advice. But yeah, so today was payday, I guess. Got about halfway left on the, that's it.
My haircut actually really fire though.
Welcome, welcome, welcome. I am the FX Savant, and in today's video, we'll be doing a breakdown on GBP CAD, how I was able to find this opportunity for a 2.49 risk to reward ratio, as well as 44.6 pips. Blah, blah, blah. If you're interested in that, drop me a like. It helps with the YouTube algorithm, as well as hit the subscribe button. Make sure the post notifications are on so you get notified anytime I post informational content like this. While you're down there, go ahead and go to the description. There will be a website. In that website, I offer trading signals, free and pro signals, as well as one-on-one mentoring. So go to the link, go over there and check out what I have to offer you. As well. We're gonna say as well and like 100 times in this video. And let's get into the video. Let's go over this trade right here. I want to go from the daily, and I just want to go back one day so we can get a kind of an idea of what was going on and where we were. So you know me, and you know what we do over here. You know how we get down. On the monthly, we got to go through oh, that's what I forgot to say. That's why I felt so weird. We'll be breaking down GBP CAD using multi-time frame analysis and structure the right way. Boom, bada bing. Back on the monthly. On the monthly, we had an impulse and a correction to the upside. And then most recently last month, we had a impulse on the monthly time frame to the downside. So we had price breaking out of structure and breaking right back into structure, which looks like it could be a false breakout. And that's on the monthly. So on the monthly, bearishness. Let's jump down to the weekly. We will keep the charts clean. What do we have on the weekly? On the weekly, we can see a little better illustration of what we have going on. So we have a head and shoulders pattern that I can see forming immediately. We also have price breaking below structure, which we would like to see it come back and retest this structure before we continue down to the downside for an impulse correction and impulse pattern. So what do we have? Monthly, bearishness breaking below structure. Weekly, bearishness breaking below structure, just retest broken support, now acting as resistance, as well as a head and shoulders with this left shoulder, head, and what we would expect to be is the right shoulder over here. And we expect it to be the head and what we would expect to be the right shoulder over here getting rejected. So weekly and monthly, we have bearishness. On the daily, what do we have here? Well, what can we see? On the daily, we can see that price had just broken below. Let's keep the charts clean. We had seen that price had just broken below and impulse down, and now we were starting some type of corrective phase. If we look to our left, we can see that this area here is of extremely strong importance. This area once had produced a push to the upside that created all this push, and then once we came down and finally broke below this area, I'm looking for it to be retested and act as resistance. So it was support here, then it had produced an extreme push to the upside, and this is on the daily time frame as well. We had an extreme push to the upside and price came back down, retested the area. Once it retested, broke and closed below the area. And now what I'm doing is looking for that same area to produce a push to the downside, because now we've broken below support and we want to see it act as resistance. So monthly, weekly, and daily, we have bearishness with a bearish sentiment. So let's jump down to our entry time frames. Our 4-hour, hour, and 15-minute are entry time frames. We get our bias, our direction from our higher time frames, our directional time frames, our monthly, weekly, and daily. And then on the 4-hour, hour, and 15-minute are entry time frames. We're looking for structure to correspond with the bias that we have. So at the end of the day, I want to say, we'll play it forward one more time. So this is end of the day, 5 o'clock. Where price was up here on the 4-hour. What are we expecting? We're expecting to see price come down. We wanted to retest this area, get rejected, and make a move to the downside. Start a move to the downside. But before we can look to sell, what do I stress? What do I repeat? We want to see structure corresponding with what we want to see. So we're getting bearishness from our directional time frames. We want to see a bearish structure on our entry time frames before we enter. Right now, what do we have on the 4-hour? We have price making higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. So until we start to see a shift in market structure, I want to stay out of this market. So until I start to see price breaking structure and creating lower lows and lower highs, I'm not looking to enter. Well, let's play it forward. Let's see what we get. Let's play it forward and let's see what we get. We're still getting price breaking structure to the upside. So we had structure here, price broke it. Price came back, retested, broke it to the upside. Price had structure here, price broke it, retested to the upside. Price had structure here. Until we see these structures being broken, we don't want to look for a sale. So let's just wait. You get paid to wait in the market. You get paid more for waiting than you do for actually trading. So now we have price breaking structure to the downside. Price broke one structure level and price is testing another structure level to the downside. So we're breaking structure to the downside. That's perfect. That's what we want to see. Now let's drop down to the hour time frame. I'm gonna get this off the chart. Just keep the chart a little clean. Now we're breaking structure to the downside and we're creating an impulse to the downside. How was was able to get into this little day trade was simple. Was off the simple impulse correction and impulse pattern that the market creates. This is the most common pattern in the market. So all I'm doing is just taking advantage of the most common pattern that the market creates, an impulse correction and impulse. My monthly, weekly, and daily are showing me bearishness. My 4 hour is breaking structure to the downside. My 1 hour has just created an impulse to the downside. Now to take advantage of this move, I want to just look for a correction, find a good place to enter, and ride to the next impulse. So what do we see on the hour? We're waiting for the impulse to complete. Once we get the impulse completed, what do we do? Well, what do? I teach. Grab your fibs. I like to grab it on something like this. Grab your fib. We'll go from the impulse, which is from the high to the low, and we want to see the correction of that move somewhere within this Fibonacci ratio. So what did I do? I saw price breaking structure to the upside. We're waiting for the correction. So price came down. We found support here. So now I want to see price either breaking structure or showing me some type of bearishness that I can take advantage of. So I'm looking for price to break structure. Price did not break structure here. We continue to make higher highs and higher lows. So what did I do? I said price is coming close to the area it's been rejected from before. I'm going to drop down on the 15-minute time frame and see if I can see any structure breaks. Play it forward. Price is up right now. What are we waiting for? We have structure right in here. This candle, this black candle, it would be red for you. This black candle is structure. I want to see price break this structure before I really get in. I want to see price come down to the structure, break this structure before I get in, is what I was telling myself. So if we play it forward, we can see price comes close. Price doesn't break, but it gives me this candle. What did I do? I used another tool. I said, hey, on the monthly, what did we have? We had bearishness. On the weekly, we had bearishness. On the daily, we had price that had just retested extremely important resistance and was starting to make its way down. On the 4 hour, we see price breaking structure to the downside. On the hour, we see price impulsing, breaking structure to the downside, which is perfect. This is the time that we would like to enter into our sell position. Once all of the entry time frames are starting to show the same structure. So once our entry time frames are starting to show what we want to see is when we start to look for an entry. Not until price is breaking structure to the downside are we looking for a sale. So all while the move is creating higher highs and higher lows on the upside, all through this, we're not looking for sales. Not at all. Only until now that we see the hourly candle impulsing to the downside are we looking for sales. What are we looking for? Now I'm going to use my Fibonacci tool and take advantage of that by finding out when price is done impulsing, taking my Fibonacci on the impulse, just on the impulse, high to the low of the impulse. And I want to find out where price is most likely going to stop and then continue to the downside for the impulse correction and impulse pattern the market creates. Well, I've identified some zones. Here's a zone here that could potentially hold price, but ideally here's a good zone here that I would like to see price be held by if we can get up in that area. If we can get up in the area, I would like to see this hold price as well, because this, if price breaks this structure, then we're more likely going to see higher highs and higher lows be created. So this is what we would like to see. This area, this structure, this zone, this price is what we would like to see hold our price before we continue down on the downside for our impulse correction and impulse pattern. So let's play it. Let's see what we get. Okay, we have price tapping into our zone right around the 618 Fibonacci. So yeah, we have price rejecting right around the 618 Fibonacci that we had, our 618 ratio of the Fibonacci we had taken on the overall impulse to the downside. Perfect. Now what do we need to see? We need to see price breaking structure, at least on the hourly time frame, is what I was waiting for. So I needed to see price break this structure to the downside before I would start looking for a sale on the 15-minute time frame. Price did not break and close below that structure area. So I'm still not into the market yet. Okay, price created a higher high. So now price impulse corrected and impulse to the upside. But we're still not breaking above this 50% 618 ratio level. I then dropped down on the 15-minute time frame to where I saw that price was being held. Let me clean this up. Price was being held by this structure right in here, this structure area, this candle right in here, this was holding price above where I needed it to get to for me to sell. So I said, you know what? Let me see if price will break this structure area. Came down, came close, tested it, was basically below this area, the whole candle, and then price came back up above it. And I said, you know what? That's what I need, because with that, I have a break of my trend line. And with the break of my trend line, we can go ahead and get in on this move. Now, you know what I'm pulling up? We had GBP CAD sales coming in. GBP CAD sell. We got a little closer. I don't want to give you what's happening next, but we went risk free. But yeah, from there, I mean, that's all it really was. I wanted to see this. This is what I wanted to see. Price was making lower lows and lower highs. We were breaking structure. We then got down to it on the hour time frame where we started to break structure. On the 15-minute, we're now at the structure. I would like to see price break the structure. Now, another topic I wanted to hit on in this video heavy was stops and targets. So when to exit the market. I see a lot of people who are either giving out information on YouTube or just trading themselves or anything in general. They just don't know how to exit the market or when to exit the market in a complete way. So now it may work for them. You could just trail your stop, let the market take you out, and that's how you trade. If that's it, so be it. But what I've found is that the market likes to, when it impulses and corrects, the next impulse usually ends at the -27, usually. Now this is general, but the -27 I've noticed of your Fibonacci, -272 ratio of your Fibonacci, price tends to hit that area pretty often. And not only just hit that area, but that area exact. So sometimes maybe 1 or 2 pips at the area, either below or above the area. Maybe not even 1 or 2, maybe a pip at or 2. 1 or 2 below the area. So the -27, and that's exactly where I took my profit at today. So that's how I had my target set. You know where to exit, because that's where your stop loss has to go, is above the high. So we know, and I've stressed it enough, that if you're selling the market, you have to put your stop loss above the high. It doesn't matter how far away it is or how close it is, it has to go there, because if price breaks structure to the upside, you no longer want to be in a sell position, and that's just fact. And the same vice versa for a buy position. Your stops have to go below the low, because if price breaks structure and hits your stop loss, you don't want to be in a buy position anyway. So now that we know stops and targets, stops has to go above the high for this sell position, because if my stop gets hit, I don't want to be in the market, and I don't want to put it any lower, because this is still fair game for the market to trade in. The market still has all this area to trade in before it hits my take profit. So I don't want to put my stop loss right in this area, have price hit my stop loss, then immediately go straight to the take profit. That's like you having a winning lottery ticket and throwing it away halfway through them reading the lottery numbers out. All right, I got everything I need, but let me sabotage myself and not get the main goal that comes at the end. So how do we take our targets? Well, we have our Fibonacci. Thanks, Siri. We have our Fibonacci, our overall move from the impulse down. Now, what do we do is we take our Fibonacci to get information on the retracement. Where would the retracement most likely stop at? We said the 618, this area right in here, we have a perfect hit with a wick in there. We find that out by taking our Fibonacci on the impulse. So we find out information about the retracement by taking our Fibonacci on the impulse. So if we want to find out on the next impulse information, if we want to find out information about the next impulse, we will take our Fibonacci on the retracement, on the correction. So how we did here, we found out information for the retracement, where we would most likely want to see price stop at, which was this area here, which it did. Now we want to see where price would most likely stop at on an impulse, which is the -27. Let me change this, the -27 of the Fibonacci. So if we put it here, my target is just above the -27, just to make sure that I get filled, that the spread does take me out and my target does get reached. But as you see, the -27 right here, the -618, and as well the 0. These are all 3 possible targets for you to exit the market. So you could say, I want to trade here and I want to take some profit, or I want to take all my profit at the low. Or another place price likes to attract is the -27. Another place price does sometime hit is the -618. So you have three areas that price tends to hit, and they all fall, the closer they are, the 0 gets hit the most. The -27 might get hit a little less than that, and then the -618 gets hit a little less than that. But overall, price tends to come down to these areas, and this is where price reverse or returns or retrace again to find another setup, more moves in the market. So once price broke, let's play it through. You'll see that price tapped the TP perfectly, and I'm telling you about these targets because I see it, and I've also had one person ask me, how do my trades hit take profit like to the wick and then immediately reverse? And this is exactly how. I take my profits at the -27. So the -27, we play it forward, we know why we got into this market, we know why our stops are above the high, we know why our take profit is where it is now. It's at the -27. I told you, you just have to trust me that that area is goated. But from here, we went risk free. This is the moment that we went risk free. That's all I'm gonna say on that. We went risk free here. If price comes back and hits our entry, oh well, we'll find another entry. But price came down and hit the take profit, and since then price has came all the way back up and it's playing around this area again. But speak on price wicking to this take profit and then coming all the way back. It's the -27. Just the -27 of the correction is how I took my target. So that's targets. We spoke about our GBP CAD setup. Well, I mean, that's basically, yeah, it's done. That's the trade done. That's that trade donezo. What did we speak about? We spoke about the GBP CAD. How we identified blah blah blah. What did we speak about? In this video, we talked about GBP CAD. We broke it down, how we found this trade idea through multi-time frame analysis, how we entered in on structure, and I spoke about exits. So stops and targets, how to exit the market. I've spoke about stop losses before, so you should be familiar with that. It has to go above or below the low. It has to. And then targets, I just spoke about today. The -27 is a pretty good place to take profit. I'll show you one more example of the -27 working out pretty well, wicking down, and it's actually GBP CAD as well. So we got into this one. Price wicked our TP and hasn't been down in that area since. So yeah, just trust me. If you do trust me, I won't steer you wrong. I want to give out correct, valuable, and free information, and I think that I'm doing a good job of that. So just trust me on this -27 thing. You also can take some profits at the 0, the -27, and the -618 are pretty good places to take profits if you don't know where to take profits. So with that being said, I am the FX Savant. So if you've made it to this far, I appreciate you. Hopefully you've learned some valuable information, stops, targets, how to analyze the market, how to get in, how to exit, how to do multi-time frame analysis. I hope you're learning structure the right way, how to identify structure and be able to use it to your advantage. But overall, that's it. That's all I really had for today. Please drop me a thumbs up. As I said, it helps with the YouTube algorithm. It also helps with this channel, me being a new creator. You could go ahead and subscribe. Make sure the post notifications are on so you get notified when I do update. And as well, that link in the description, the website, www.thefxsavant.com. Go check that out. Go get into the free Telegram. It's free, man. It's free, so why not? But that's it. I hope you all have a good trading week. Happy trading, and I'll catch you in the next one.